Welcome to Key Factors Podcast, where knowledge meets ambition in the fast-paced world of real estate and mortgage. I'm your host, Mark Jones, bringing you the latest insight, trends, and expert advice to navigate this dynamic property market. In each episode, we dive deep into the heart of the industry, dissecting market movement, exploring investment strategies, and unlocking the secret to real estate success. Whether you're a seasoned professional, an aspiring investor, or simply looking to stay ahead of the curve, this is the ultimate guide to making informed decisions in the world of property and real estate. So grab a seat and let's uncover the key factors that make all the difference. Welcome to Key Factors Podcast. Let the journey begin.
What is New York City without its skyline? Monuments to commerce standing proudly shoulder to shoulder. More office space than any city in the world. But peek inside all this vertical real estate, and there's a fundamental question. Where is everyone? More than 95 million square feet of New York office space currently unoccupied. The equivalent of 30 Empire State Buildings.
I think this is an existential moment. I call it crossing the chasm.
What's the chasm specifically?
This post-COVID world of higher interest rates, the changing nature of how people work and live. We're not going back to where we were. It's a different world, and it's going to be turbulent.
All right. Welcome back to another episode of Key Factors Podcast. I'm your host, Mark Jones, and we are sponsored by ReviewMyMortgage.com, the largest index of mortgage programs in the nation. And we've been talking a lot about residential real estate. We've talked about the ins and outs. We've talked about tips, tricks, market data, all of those things. But I didn't want to go another day or another episode without bringing in commercial. So I've got two experts on the panel today with me that I can share some of my thoughts, ask some technical questions, because I'm going to treat this episode as if I'm an infant. I focus a lot on residential and really don't get to see or hear the nuances of commercial. So without further ado, let me introduce my guests today. I've got Andy Hilger and also JJ Gorena. How's it going, guys?
What's up? How are you?
Doing well.
There should be a poker podcast because this is the shark right here.
Play a little heads up tournament real quick.
Not with me. I can't take it.
Oh my goodness. So that means that commercial must be doing well then, huh?
We have more time on our hands.
But yeah, today, guys, I want to dive into the world of commercial real estate.
Sure.
As you saw the video that we played just before this, it's all doom and gloom out there. But everything, in my opinion, with real estate tends to be local. And our local market is not like any other market. And we'll dive into that stuff as we move further, but I want to take a step back and just kind of talk about some of the basics of commercial real estate.
Sure.
Number one, matter of fact, let's take a step back. If you guys could just introduce yourself again and give us your expertise, your history in real estate and all that jazz, go for it.
Andy Hilger. I have been in real estate since 2003. The first 10 years of that career was with a home builder, developer, and then moving on with Marcus to start the Laffey Hilger Group that we've worked at for the last many years since then. And we do residential real estate primarily, and then within the commercial world, I've been very involved in medical offices and done many medical office buildings and some additional commercial real estate outside of that over the years. So I feel like I'm pretty versed in that regard.
Very good. JJ.
2004, did residential for 9 years, had our radio show. Started getting a lot of leads on commercials. So I ended up doing commercial now for the last 10.
Very good.
Yeah, just concentrate on that. Obviously because my business partner is always on a plane every 3 weeks, so I'll step back in. I'll stick back into residential, but for the most part, just commercial.
Okay.
Yeah.
And it obviously does enough to pay the bills and build the empire.
Sure.
And I believe that San Antonio is one of those markets where we're still very affordable, not just on the residential side, but on a commercial side as well.
Well, what I would talk about, it's a little bit bigger than San Antonio. And I actually got some numbers. So the triangle that makes up Dallas to us, taking in Fort Worth, Austin to Houston, we call that the Texas Triangle.
Okay. Yeah.
So since 2017, the numbers, I looked it up, we're at 22 million people live in this triangle. The population growth has been 14% year over year.
Wow.
The job growth is 37% year over year.
Now, do we know if that population growth is due to people migrating this way, or
the biggest migrations are coming from the East Coast, like New York-ish, a lot from Seattle and California.
Yeah. Wonder why.
No state income tax. No, I can go off on that. Yeah. That being said, and you're correct. So I think the biggest change or difference between residential and commercial is the financing.
Definitely. Definitely.
Because with you have to abide by housing of urban development. So just because we're ugly, you have to give us a loan, right? You have an 800 credit score.
Right.
I don't know, but if you have 850 credit score, no debt, make a lot of money, you can't discriminate.
Correct.
Whereas we're a regional. Banks want to lend in their backyard. Chase can't do it in a macro level. They will, right? Like the Wells Fargo's and the Chases will. But for the most part, you're dealing with PNC, you're dealing with Frost, you're dealing with all those. And your
local credit unions, your local investors that can do portfolio and keep
Credit
them on their
Human,
books.
Bank of San Antonio. Because and let's take Frost for instance. Like I think when I looked before that, $2 billion of assets that they manage, they want 4.5 buckets to be all even. Those buckets are office, industrial, retail, and multifamily.
Okay.
You can throw in some land. They don't love it. And you can throw in a little bit of self-storage.
Right.
But they want, if I poured this water out, they would want all, like if this is a $2 billion that I'm, for Frost that I'm dealing with, I want a little bit in each one. Mm-hmm. So when someone says like, hey, how can I finance this piece of land or this multifamily? I go, what sucks? Or it does or doesn't. I can't just call my lender, my one lender that works at Think Mortgage because he's the best and whatever. Because you're going to just give us whatever, all the options that we have, right?
Right.
So instead, I got to go to my Chase guy, my PNC guy, my Bank of San Antonio guy and say, who wants multifamily?
Who's looking for this appetite? Who's got the appetite for it?
Exactly, because who needs to fill in their bucket a little bit more? And so what's weird about commercial on the finance side is that this guy will have better rates and terms than that guy and that girl and so on and so forth. So we are insulated in that regard because, Frost is doing well. They're throwing up buildings all over the place. All right. That means our region is doing well. In fact, there's 4 major population regions in the U.S. It's Cali, right? It's the Eastern Seaboard. It's all the lakes and it's us. We've already taken the lakes and now we're going after the other 2. And they say by 2026, we'll be pretty much on par with Cali. We're the 7th largest economy in the world. We have more GDP in Texas than Italy and Canada.
Wow.
I know.
That's strong.
So like all this stuff that I know you showed a clip.
Oh yeah.
Insulated, homie. We're
insulated. And we'll get to more of that. I just wanted to stick to more so the basics and giving the folks out there listening a basic understanding of determining what is commercial, what is not commercial. So different types of commercial would be your retail space.
Sure.
You've got
the stores,
apartment complex. You've got storage units. What are some other examples of commercial real estate?
I mean, anything and everything that's not a residential property that's zoned accordingly. You've got land, non-denominational churches are commercial real estate. Yeah. Right. I mean, the list goes on and on.
Industrial,
every type
flex.
of business, industrial, warehouses. I mean, it kind of never ends. Everything outside of a residential,
up to a
single dwelling residential property. When you see the contracts, 1 to 4 family,
correct.
Anything above 4 family is going to fall into the multifamily commercial category. So it's really anything except for
your house.
Your house.
Yeah.
Correct.
That makes sense. And for me, as I started getting, I'll be honest, as we started making more money, one of my goals was to own a commercial space and lease it back to myself and obviously run that through P&Ls and all that jazz. But as we continue moving forward, the way that this industry that I'm in has shifted to not necessarily needing to be in the office. All of my operations work from home. Matter of fact, I've got a processor that's in Louisiana, other in Bernie. I mean, we're all over the place because we can and have the ability to do that. it now kind of makes me take a step back as someone that considered having this as their dream to have the triple net. And we'll explain all that kind of stuff later. But it kind of has a pause in it for me at the moment until I find out more information. And you guys are the right ones to talk to get a good understanding of what the hell's going on.
Well, I think Andy's pivoted, right? You had an office, you don't anymore, right? Is that correct?
Yeah. We've gone to a work from home structure. We had almost 3,000 square feet. And, ever since COVID, a lot of things have changed. Once people got into the habit of setting up an office from home and working from there,
right, it's
been very slow for people to want to come back. Right. You know what I mean? They've got a new routine of how they take their kids to school and pick them up and it works. And you adapt to those types of changes very quickly. Like you just said, you have people, in other states that work for you and do these roles. And we just made that change to go to that type of structure where we don't have the overhead of an office that's being, used by one or two people a week. You know what I mean?
Right.
So, yeah.
And I was with KW for 17 and a half years, love them, but I saw the writing on the wall too. When I had my radio show pre-COVID, I was screaming that office was dead back then because they were doing like they're like 400,000 square feet right next to 300,000 square feet, like on Northwest Military and 1604. And I'm like, these are empty. Like we could have ran down the halls. Like remember Breakfast Club? Like we could just ran down the halls and no one would have bothered us.
Yep.
And so, helping market centers and looking at P&Ls at that level or offices for lots of agents like, he had, because he's a broker, I realized like it's one of the biggest, it's just, if you're going to make money in real estate, you shouldn't be in the office, right? Like we make our money in the streets. You might need somewhere to like hold your crap, maybe lead generate for a little bit. But for the most part, like we're not a 9 to 5 type of industry. Right. It's a contact sport. It's belly to belly contact. We need to be with people. We need to be out there. There's the prospecting times and whatnot, but assistants, our contract people may need a space, but we don't for the most part full time. That being said, that's why I don't know if Lisa Guzman and I are opening up. She's opening up, and I'm her in-house coach, the Success Space, which is a co-working space. It's agnostic. We're not even having real estate agents per se. It's going to be
shared space,
financial advisors, CPAs.
You can rent an office if you want to,
architects.
Or you can rent by the hour.
It's less than $50 a month.
That's very cool.
And you can come in and you can work. There's a cafe there. Smoke a cigar on the patio.
We actually used one of those spaces. I don't remember what the name of it was, but down in Brownsville, when I opened the Brownsville office, we used a temporary space like that for a couple of weeks.
Wait, Brownsville has co-working space?
Oh yeah. I don't remember what the name of it was.
They barely have running water. That's my hometown.
It was super, super cool. Was not very expensive. They had 3 shared conference rooms, one on each level. Sure. You have large offices, small offices, cubicles. But the concept of it, and this was 3.5, almost 4 years ago.
Sure.
First time seeing it, going, holy cow, what is everybody going to do when this starts blowing up? Because that's what this new generation is about. Sure. They'd rather go to Starbucks and work around everybody else, when I'm like, leave me the hell alone. I need to get some work done.
Well, our Success Space is a perfect mix because we have a podcast room, a content room that you can have by the hour. We have a conference room, we have training rooms, we have huddle, like booths, we have soundproof rooms if you want to just bang out calls. So anything you want, you just kind of you get there, you click in, I need this for an hour, I need that for an hour. So we've realized that that's the need.
Right.
Unlike how he knew, that's why he's pivoted, he's smart. As a broker, you said 2 agents show up to the office out of however many are under you. Why? Like,
what's the point?
Yeah. And then come recession time, that's a fixed cost that you can't get out of. And, if you look at some of these bigger offices and you see what their overhead is, it's ungodly. And the worst part is most of them lease. Mm-hmm. The only argument that I would have for someone like you is like when you're talking about triple net.
Right.
Is with commercial real estate, you can depreciate the asset over 39 years. So that's, I'm a weirdo, but I know these numbers, 2.64% per year. So let's just say it's $1 million building, and you're using half or a little bit more than half of it for Think Mortgage.
Right.
You can rent the other half to, like, let's say me or Andy or whoever. You can, it's $1 million building and you can depreciate it every year at 2.64% rate. That means you're writing off essentially $30,000 almost every single year on the top of your, at the top.
And you can do that every year for 29 years.
And you can front load so much of it too, because people usually have office, or they used to when they were still selling, for about 5 to 7 years on average. You can front load so much of that too, like the build out, the interest that you pay, the closing costs. So maybe not for office, but if you're a trucking company, buy a warehouse. If you're a, you know, like he does so much, he's the medical office guru here. If you're a group of physicians, leasing doesn't really make sense.
Oh, not at all. Not at all.
No,
That's been the majority of my commercial experience. And I learned this quite some time ago. My ex-wife is a physician, and her partner doctors were kind of pioneers in the Westover Hills area, and they moved out of the Christus Santa Rosa hospital facility where they were leasing and built their own freestanding building. And when you look at the numbers, you know, for what they pay compared to what, you know, by the time you pay $30 a square foot plus triple net expenses,
right,
you're paying a huge portion of what you would pay to finance and build your own building.
Oh, yeah.
And the cool part about that is, you know, it just kind of created a domino effect and a flood where other people are saying, hey, we want to do this too. And we want to do this too.
Yeah.
And now you're 8 buildings or whatever later, you know what I mean, of that spider web effect.
Absolutely.
as you refer to it. Because once you do it, and once you do it for a client, you realize how much sense it makes.
Right.
It's very easy for you to say, do you want to, you know, you're going to be in business for another 20 or 25 years. You can go get a note and build your own building,
and you just
can
threw that money away.
You know, or you can pay very close to the same amount in rent for the next 20, 25 years. It's up to you. With one route, you're going to have an asset when you're done that's a retirement asset that you can rent out and make this exorbitant rent, you know, until through your retirement and pass that on to your children, or you can simply sell it and put a few $1 million in the bank and ride off into
build
the sunset.
The portfolio.
But it makes
or 1031 exchange it.
There you go.
Or 1031 exchange it, buy another property, right? You know, so there's so many more.
You're so greedy, Andy. You're so greedy.
It makes so much sense to go that route
if you can.
Physicians, if you can. Right.
And I remember Andy, back when you helped me negotiate the first lease here at Lock and Terra, they continued to repeat to us was, Lock and Terra we're not retail. We're a real estate company. Like we own real estate. That's our number one money driver. And then Andy and I were talking before this, and he mentioned that HEB is one of the largest landowners.
Industrial more than anyone.
Yeah.
Like everything off of 35 and 410 is theirs.
Yeah. When I go to look for land for a client in Bexar County, and half the stuff that pops up is owned by HEB.
Yeah.
And you're like, okay, never going to get that one. And a lot of people don't know that. You know,
and they don't pay you if you
do
try to leave.
Yeah.
They don't pay you. They're like, we don't need you.
Yeah.
Really?
Yeah. And they don't. I mean,
they don't need it.
A lot of people think HEB is a grocery store company, and once upon a time they were. But the margin in groceries is very tiny, and every center you look at where HEB is the anchor store, and there's 30 businesses renting space around that anchor store, they own it all.
They do,
and they
won't pay us out,
and they probably paid for it outright. And so they've got that rental income coming in that I obviously don't know for certain, but I would suspect surpasses any grocery, you know, what you pay for a steak there, you know?
Yeah.
So, right.
Well, think about all the industrial they have though. Like it's all, you know, the bottom northeast side of San Antonio, 35 and 410. If you're trying to find any industrial, you can't. It's all theirs. Like, and they'll lease it and have it vacant because they just may need
may need it in the future.
They may need it in the future. Yeah, and he's being humble. I think he created the medical center that is now 151 and 1604. No, really, because he was talking to me about that stuff. I was like, who the hell is going to go to the hospital off 151 and 1604? But now it's like a second medical center out there for sure.
Right.
And banks love. They will still lend on medical office all day long.
Oh, yeah.
It's one of those things.
Recession-proof.
Yeah, it's recession-proof.
Absolutely.
No, and to piggyback on one thing you said earlier about the banks, that's very important for, you know, there's how I don't keep track. I don't know if it's 15, 16, 17,000 licensed real estate agents in Bexar County. We dropped
and
there's only 400 or 500, you know, real commercial real estate agents.
And out of those 400 or 500, no, we're being serious, right? Like out of those 400 or 500, we all know each other.
Yeah, right.
Like it's a handful.
I believe that.
It's a very small, it's a very small group.
And do you think that is because it is so complex, or do you think it's because they're they're too few and far
I know
between
why.
on the opportunity.
I know why. Because CoStar and LoopNet costs way too much.
Say that again?
CoStar and LoopNet, or MLS,
okay.
right? Costs us way too much.
Okay.
Way too much. It's
$8.90 a
absurd.
month.
Right,
$8.90
yeah.
a month.
Oh, wow.
And that's it. That's with like one listing. They're smart enough to know, like, oh, you have a listing. They charge you per listing, and they make you commit to 6 months up front. Where if I'm a residential agent, I have MLS. I give 1,000 listings.
Sure.
Same price.
Same.
Right.
Okay.
Yeah. So that bar. So remember last time we were talking.
Yeah.
That bar of entry got high. Right?
Okay.
So
And what it did is made the cream of the crop rise
just the
to
good-looking
top.
guy. It's only the good-looking
That's right. That's right. The GQs. So now question, right before Andy, question, if an agent does residential and wanted to take a crack at helping somebody procure a commercial lease, can they do that, or do they need to now go and pay their fees, get a new designation, et cetera, et cetera? I mean, layman asking this question. Remember, I'm an infant.
Here. Let me take a crack at this, and tell me if I'm wrong.
I'm not saying if it's
No.
to do that.
No. I want to explain to every residential agent out here.
There you go.
Residential's kind of boring, but it's fun. So what I tell residential agents is like, okay, you have an MLS that has accurate numbers that are updated every minute every second.
Yeah.
We don't. You have comps, comparable properties
Absolutely.
that sold. We do not. You have lock boxes so that you can go on a Saturday at 2 p.m. or a Sunday. We don't. If we do a showing, the landlord has to show up, the owner has to show up. Right? It's crazy.
Scheduled appointment.
Scheduled appointment
Yeah,
only.
every time I went and
these
saw a
dudes
new
golf
property, they
every morning, so 10 to 3, right?
Oh, it's bankers hours on steroids.
No,
Right. It
bankers.
really is.
Wow.
Yeah.
Not even.
Yeah,
I wish it was
right.
bankers hours. So we have to do all our business. This is why we play poker so much, because we have to do all our business between 10 and 3,
Yeah,
Monday through Thursday. Because Friday I can't get them on the phone,
Gotcha.
and they don't. So the big boys like Riata, CBRE, they're in house. Their CoStar, they have a back end MLS where they just share their own numbers, and so brokers
That's what you were talking about last time,
Yes.
where it's exclusive.
And so they have their own numbers. They know the price per square foot. So if me and Andy call, because we're not them, right? Andy's independent. I'm with the XP Commercial. They're like, let me see if I want to tell you the numbers that we have. So it's all hidden, and it's like smoke and mirrors. So if I have I'm representing a franchise, or I'm helping this really delicious restaurant in San Antonio franchise, and I told them, look, it's going to cost more time than anything with me. I have a dedicated person on my team that calls over 250 agents to see, like, what do you have subleased? What do you have we have to call them and text them.
Gotcha.
This is like 1984, like when my dad did real estate. Whereas residential, I just go click, click, click. Here's all my options, email, and then I go, I don't know what else those
Right.
dudes do because they don't work. So like we have to work and call and right? Text, email. Am I wrong?
Yeah.
So if I'm a residential agent, like, I'm just gonna crack into commercial, it's like, bring it, because you're gonna have to pay $8.90 a month. You're gonna have to have an assistant full time, or you're not gonna sleep. You're gonna have to call 250 agents just to get options for a renter.
Gotcha.
Like just to get options for someone that's leasing.
Wow.
I mean, so the best thing to do is refer Andy, because
So
he'll
that-
take it from you.
So
He'll take it for you.
that being
I can
Go
share
ahead.
a quick story
Go ahead.
on
Please do.
exactly what JJ's saying. When I transitioned from a home builder to,
I'm like, wait, what? Oh.
to general real estate, the first broker I worked for, Tamara Alarcone with Full Spectrum Realty,
remember,
great,
yep.
great broker. And she saw me getting involved in some of these, commercial transactions. And she was like, I remember her telling me it's the Wild West
Wild
of
West.
real estate.
Wow.
It's crazy.
And she's like, there's no control, there's no limits. You got to double, triple check everything.
Yep.
And it's a good old
They'll change the numbers on you
Yeah.
like that.
It's a good old boys club that's hard to break into.
Wow.
And so the first building that I did was a 30,000 square foot ground up medical office. Put a group of doctors together, created a holding company so they can charge rent to the holding company, write it off, everything you were talking about earlier. We bought the land and we hired the contractors, the architects, and we built the building. But just getting that transaction done, I would call, the numbers for the people that had listings, and then you get this receptionist that says,
It just makes flyers.
"Yo, man, who are you?" And you're like, my name's Andy Hilger with so and so. Really, I've never heard of you.
Yeah.
And you're like, well,
Does that matter? Yeah.
Does that matter? Right?
Yeah.
Well, why is that? And literally, that was. Where's your office at? Do you have a physical office? Where's
Oh,
the
wow.
location?
Yeah.
And no kidding. This
Talk
is
about
how,
a gatekeeper.
I'm serious.
And I had to get out and go beat the streets and take
Yeah.
pictures of every sign with land available and come home and
See?
organize it and call these
crazy.
people. And if I called 10 of them to get the information I needed to try to advance this transaction, I might hear back from 4. The other ones either just didn't care they didn't want to call me,
they're
or
all
golfing,
they're
or
all
whatever. And you have to adapt and work with what you can get your hands on and what you can make work. And, that's always been one of the best parts of my career. And this is just in that small area. And,
Right.
a few years later, I've done multiple buildings and have multiple listings. And, when I get the call
He's a player
on,
now.
when I get the call on one of my, listings, I can be like, so who is this? Never. What?
That's messed up, man.
That's awesome. Full circle.
Yeah, right.
But we're making it sound like this is the bad. Let me tell you why. For layman,
let me just real quick, because the question was, is it possible for a realtor? The answer is yes, but based on what you guys have just said, good point. Why?
Just give it to one of us.
Right.
We will pay you. You pay referrals?
Yeah.
I pay referrals every single week, bro.
Gotcha.
My favorite check to write.
Several of the agents on my group have done commercial transactions, and we just end up doing it together. You know what I mean? I say,
Gotcha. So that they get to learn.
Bring it on.
Truth
we'll do it together.
They probably won't do another one.
Maybe
but
some of them are like, I don't want to mess with this. This took 4 months. You know what I mean, or whatever.
For a lease,
to lease this space and nonstop work.
My P&L start. They end in August for 2025 because anything I write up past August gets paid next year. So you have like the bandwidth and the runway to do it.
Right.
Why I can do this? But hear me out. While we're giving, I don't want anyone to commercials. We're making them sound terrible.
Yeah.
The reason that all this, I know it's fucked up. The reason that it's so secretive though is because we're a non-disclosure state. So if you're representing your client's best interest, like this dude creating, holding companies for medical office partners, and the last thing they want is to have Bear County know how much they're charging and paying. So we don't throw it up there. The MLS is forced to put their numbers on there because NAR controls their boards, which controls what they do. But Texas is another reason why a lot of people come down here. It's a non-disclosure state. So the last thing that when they're like, how come you don't, residential is like, why don't you just put the price on the flyer? I was like, because I would be doing a disservice to the next buyer.
Correct.
Of that's going to buy his medical
That's
office
a great
right?
point.
So that's why it's so secretive.
Maybe those listening may not know what you mean by that. Can you explain what non-disclosure and what the impact actually is of that?
Texas is so business friendly that there's a law that says you don't have to disclose the sale of any property, residential either, by the way.
Right.
Again, MLS is controlled by the board, which is controlled by NAR. So that's how that trickles down. Because I can't put anything on the MLS like call me.
Right.
But he has, I know because I look at his property all the time. He has like, what's the price per square foot to lease, or how much is the price point says, and it's like, call me. And check this out. It makes so much more sense how we do it, because if interest rates go like this, then shouldn't our price move? Right.
You would think so.
Yeah. So we can adjust price. Does that make sense?
Yep.
So all of it makes way more sense. Of course, it's more labor intensive, I guess.
Sure.
But
it comes with the territory.
100%. And you got to be smart. You got to be good at numbers. Like Andy creating holding companies. I mean, this dude's. So you have to control that information, because let's say us three want to go buy a retail center. We don't want anyone to know what we bought it for. Right. Because let's say that retail center is being taxed at 1.2 million in BCAD, but the numbers make sense, and we should buy it at 1.8. It's the last thing that I want anyone to know. Also, we don't want the next tenants to know what we pay for it, because then they'll know how much we should be charging per rent. Do you see how
they'll put that in their perception and use that as their reason to
math is the only thing that we have going for us. Like, why would we give it away?
So would that be similar to, let's say, on the residential side, somebody listing in the MLS, private listing,
you still see the price,
right? And then somebody wanting to buy it calls that agent and says, "Hey, I'll buy it, but you need to take it down from MLS."
I wish it was like that.
But is that possible? You see what I'm saying?
I don't want to get in trouble. I don't know.
It's frowned upon.
Is it?
Anytime something's on MLS,
you want it to end that way.
I believe their guidelines are such that if it sells, a selling price is disclosed.
Yeah. Gotcha.
Concessions are disclosed. All those types of things are disclosed. The whole reason that there's this entire other platform in commercial real estate, the only reason it exists was to create another platform where none of that disclosure is required.
Right.
You know
it's all behind the curtain.
You put a building on the property for $2 million and you sell it, and it just says sold. It's all behind the curtain.
Wow.
You have to know, and I'm sure JJ does the same thing. You have to have relationships with
appraisers.
You can call the appraisers and say, "Hey, I'm looking for X, Y, and Z. You got anything you can send me?" You know what I mean? Or call other brokers brokers and say,
Sure.
hey, I'm trying to find, call
Yeah.
JJ. Hey, I'm trying to, help a client, with this particular property here. I can't find any comps. Have you sold anything? Has your office sold anything? You just have to kind of dig in under the surface and go find your information. And that's the way the process is designed.
Sure.
So
and it's a lot of blink twice stuff too. So let's say Andy has a medical office space that he sold for $2 million off of 151, and I'm about to list one.
Okay.
And mine's a little bit smaller and older, whatever. And he just put sold. I would call Andy and be like, hey buddy, did you get around 1.8 million? And he was like, I was a little better than that, it's that crap. And if you're a residential agent, you have all the information in front of you, like you're frustrated and they run away, right? Yeah. But with me, I'm like, blink twice, homie. I'm gonna go 1.9, blink twice. It's 2 million. Okay, cool. So then but here's the thing: it's all math. There's no why I like, and I'm sure Andy's the same way because we're poker players, right? So why I like commercial, there's no emotion. Like if it doesn't work, I'm like, hey, dude, we'll get them next time, right?
Yeah. Especially with the folks that you represent, I would imagine.
Well, no, because I think people are getting lost in the weeds. Let's start about, you talked about triple net. And if someone's doesn't understand what that means, this is how weird commercial is. Like, let's say I have people that own 20 houses. And I'm like, why don't you just own a 20 door apartment complex? Yep. And they're like, it seems like too much first of all, it's all centralized tenants. Management is easier, blah, blah, blah. But look at this. Like even in the commercial real estate where it's, if we all bought a retail spot, the tenant, think about this. They lease from us a price per square foot per month or year.
Right.
They maintain it. They build it out to the spec for themselves. Oh, yeah. We might throw a little bit in there.
TI money.
Yep. And they pay the taxes and insurance. Could you imagine?
And they pay the property management.
They could, yeah.
They pay everything.
Yeah. They as owners, we just like. So it's weird because our gross profit is our net profit.
Yep.
And those numbers are crucial because that is how we find value in real estate. Everyone looks online and they're like, oh, it's an NOI. It's, it's net operating income. So what we take off the top or on the bottom divided by the value equals the cap rate. The bad thing about cap rates, especially right now, is cap rates are it's a formula that the weighted average of equity and the weighted average of debt are added together. So I'll give you an example. So if Frost Bank is only giving loans or 20-year notes at 9% interest with 30% down, then we have to say like, okay, if my investor, let's use $1 million. If my investor has $300,000 that they have to put down as a down payment, they lose that money in the market. So what would they want as a return on that money right now? And so we actually have to know Bloomberg stuff. Like gotcha. I got to know what
is the index sitting at?
Yes. Yep. And so I have to look at the index and say, okay, so that's a formula times 0.3. And then there's a decimal and 4 numbers on the right side. And then I got to go take a freaking Frost banker out there to lunch or coffee. That's what I spend most of half my days doing. And I got to say, what are your terms? And I find the best terms. And then I got to figure that out. And then I add them together and that's a cap rate.
Gotcha.
So the good thing though, is like once you figure it out, like this is what it's going to sell for. Cause this is what it can be, finance. And that's it. Whereas residential is like, well, I really like the master. Like there's none of that crap.
Yeah. So go ahead, Andy.
It is a lot more complexity. And I know JJ's probably dealt with a lot of this as well. With these banks, I would say in my experience, I'm sure it depends on price point, most of the time, they're splitting up the notes.
Right.
So like you go to Frost Bank or whatever bank and they say, yeah, we want medical offices. We're going to take this to our board. Yeah, we're going to approve it. And then when you get the term sheet from whatever bank it is, a lot of times they're going to take 40% and bank B is going to take 40%. And there's a completely different note, a completely different lien on the building.
Yep.
And then the buyer's going to put down that remaining 20% or whatever. Or in some cases, they do an SBA route and they put 10% down.
No, that is the one. That is the one time that it's almost like you all is the SBA. If you're using like if you're a restaurant and you're buying the use of your company, it's like FHA. It's 10% down right now. The interest rates aren't that bad. Well, they're like 7.5%. Like 10%
that's
down.
Not bad. That's bad. Hell no.
Like you as a loan.
No, for the benefit of what you get as thus far, what I've heard of being an actual owner of a commercial building.
Sure.
Hey man, 7%. Take your money and run.
Yeah. I mean, yeah. So that's how it is.
So you guys talked a lot about the basics and whatnot, and I have one more question to that regard, which you mentioned a little bit, but how the hell do you guys figure out comparables on commercial space? Does it have to do with the use of it? I mean, how is any of that stuff determined?
No, I kind of explained it. commercial real estate is worth the income that it creates.
Right.
Very
if
good.
you ever look at a commercial appraisal, would
Yep.
be a great way to learn this. You look at a commercial, which are expensive. You know, we do
Yeah.
appraisal.
Absolutely.
It's
Takes days.
$600-700. The commercial appraisals I've seen are like $3,000.
Yep.
They're much
Gotcha.
more expensive that the buyer has to pay for this appraisal. But the asset, the physical asset, is only one factor of that.
That
How much
makes
money
sense.
can we
Yeah.
The rest of it is what's the going rate for rent in this market, how many square feet is in the building, how much income can it produce
Right.
based on what the market will bear.
And what the property's going to be used
Correct.
for.
And what it's going to be used for. And so, and those calculations are all there. You know, the average rate in this area is $24 a square foot or whatever it might be, plus triple net.
Gotcha.
And the income generation aspect for the future is a big part of what the determination is for what that building is worth.
Gotcha.
And in residential real estate, you don't see any of that. You know, it's not even really brought into the
No, there's
equation.
comps.
Right.
There's just
Right.
comps. In that world, it's probably a little bit more heavily weighted toward what
Location.
kind of income will this bring
That
in.
makes sense.
But even more so, think about it as an investor. I know it seems like, oh, this is so complicated. Think about, all right, let's say, do I want to own 20 houses or apartment complex? Let's go back to that. If I own 20 houses on a block, anytime any of those sell around us, that's going to
Affect your
directly
values.
affect our
Absolutely.
value.
Yep.
Right.
But if we buy an apartment complex, all we got to do is raise the rent.
Right.
You know, does that make
makes
sense?
It sure does, actually.
So we don't like. So that's what I'm saying. Like, you can be in the ghetto, or I can't say that. You can be in
but at the same time, you are also
you can
accounting for the vacancy factor. If that is the case, you lower the rent, which also
Yeah.
increases your revenue, which brings that value
Sure.
right back up.
But sometimes, like what they were doing so much in here in San Antonio is we only made Class A. We didn't make any Class B, and then San Antonio's blue collar, so they can afford Class A. So
Explain Class A, Class B.
Class A is brand new, high price per square foot apartment complexes.
Very good.
Like if you think about the Rim 15 years ago, there was
Right.
none of this.
Correct.
Think about the Pearl or near like South Florida is where the HEB is. All those apartment complexes. The new ones are just they're swanky. They got the pool. They
Yep.
got all the stuff. But I always look at like my siblings or like my cousins that are just blue collar San Antonians. Like they can't afford that, bro.
Right.
They can't afford that. So no one built any. They didn't build anything for them. So what ended up happening in the last 15 or so years is that there was all these ugly apartments from like the 70s and 80s that you would see on like Vance Jackson Keller.
Yeah.
And then you saw like, man, that looks dilapidated. And they would come in there and then they're like gray with like mint trim. And now it's called like
La Quinta?
like the park at Jackson Keller. And you're like, what the hell? And but
right
what
here, UTSA Boulevard, they do the same thing. Still orange on the outside.
Yeah, you're like, dude, I never wanted to party there, but now I kind of want to. So,
Exactly.
So think about that investment. You can go into a demographic. It's not location. It's like, no, now they got something, put lipstick on the pig, or even better, they made those rents go up because they put in work and made the amenities better.
Yeah.
And it doesn't matter the location.
Mm-hmm.
So much more control as an investor is in commercial. You just got to like get ready for it.
Because every so often,
Mhm.
I'll do a search online just to look at office spaces,
Just call
and
us.
you'll see. Well, this is just for information
I'm just
purposes. Some of the properties actually do have a price per square foot or a value if you want to buy the whole building. So that would mean that they've already done the calculations based on the best use of this property, blah, 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 blah. But at the same time, it doesn't mean that that's accurate.
I don't want to give away my marketing.
If they're putting it out there, if that makes sense.
I don't want to give away my marketing strategy, but this is how it usually goes.
I don't want to give it away, but here we go.
I'm sure Andy's the same way. If I'm like, I got this really cool, nearly historic warehouse right by Alamo Dome.
Okay.
The best use for it is a distillery or a brewery.
Okay.
So I'm going to go, so it's not on the CoStar well, it's on CoStar, but it's just like, call me if you want the price.
Where's it at?
It's on Hofkin.
Okay. My buddy owns a MMA gym right by there.
Okay. Tell him to call me. So, the best uses for a brewery is just perfect because, you know, the missions are coming right across the street. It's right by the Alamo Dome. It should be a distillery because you can distill on, it has a conveyor belt, dude.
Oh, wow.
So they can actually like sell it out the back, have people taste it on the bottom. You see what I'm saying?
Absolutely.
Super cool.
Yeah.
That's the best use. Like it's called a feasibility study.
Feasibility. There you go.
What is the
Correct.
best use for that? So a brewery or a distillery, they should pay a certain price because it's premiumly located for them, walkability,
Built
all that
out
stuff.
for that, the
Yeah.
whole nine. Yep.
Now, So strategy for marketing as a listing agent is like, I'm not gonna tell anyone a price because the certain price for this demographic, this class of people should be this, but they should be paying premium because it's awesome.
Right.
But let's say Withering Springs and all the different breweries and distilleries are like, no, we don't want anything there. Okay, well then who's the second best user?
Gotcha.
The second best user I think would be like a trucking company or a small to mid-size
storage.
Well, yes and
or
no.
Still the assembly concept.
Yeah, maybe light industrial, like
Got
someone
it.
that's like making putting stuff together and shipping it out. That's probably second best.
Right, yeah.
Exactly. Second best, use a little bit of manufacturing and then distribution. And then the third one is just like someone's going to chop it up and just lease it. So 3 different prices.
Gotcha.
So we go to A, and if we run out of a runway, everyone told us no or F off. We go to marketing B, marketing C. If you get past those 3, then you have to kind of put price in so that because these are all local eyeballs. So then if I want national eyeballs, then so we called all the brokers. I called Andy. I told him, you want it? No. I called because we don't just sit. We actually called all the brewers, all the distilleries. They told us F off. We called all of the manufacturing companies. They said we don't need it. It's too small, too big, whatever. And then we're like, okay, we're out of options. So like now 6 months, and this is 9 months into a listing. Then I'm like, all right, let's see if we can get some national eyeballs on it. And because see, there's commercial real estate investment trusts that might just want to buy it to keep it vacant.
As an asset.
No, just to keep it vacant.
Oh, really?
Just to write it off. There's so many people that call me like, hey, dude, how much is this property? Why aren't they selling it? I was like, and I hope we have these problems one day. But like, if they're a commercial real estate investment trust that owns a bunch of warehouse and they do a 1031 exchange, they might want to just buy just to hold it and just be like, you know what? That's going to be worth a lot more later once the emissions come out. I just want to eat crap. I want it to like I want to bleed out into it.
Correct.
I wish we had those problems. But we don't yet. So it's so much more versus
it's very intricate. Absolutely.
Versus just put it on MLS and like pray.
Yeah.
One thing that comes to mind in commercial real estate here, and you say that is, it's very true, is in commercial more than any other aspect of real estate, everything is always for sale. The statement that everything is for sale. In commercial real estate, everything is always 100%. For sale. I'm sure JJ gets a lot of this too. You do one of these projects, you build one of these buildings, you fill it up with tenants, and I've had pension funds from other states, contact me, asset managers from other states wanting to know if they can do a presentation to go through, what they would offer from the building, real estate investment trusts. You know what I mean?
Yeah.
These are the buyers
PPMs.
Of these types of assets, and they're always looking. They're always looking. When you own one, you're going to get approached. They're always looking. They're like on the prowl. If they can get the right deal, but they don't want them until you filled it up with tenants, and it's got to calculate
because they're in New York.
Right.
Yeah.
They're buying that cap rate.
Exactly what it is.
That's all they're buying. You know what I mean? The building needs to be in good shape. It's going to hold up. It looks good. It was built right. Everybody's happy with it. There's not any issues. That's great. And then now, what does this return?
Yep.
Right.
And just like the banks that buy these notes are diversifying their portfolios by taking on different types of commercial, notes, these real estate investment trusts and, fund managers and pension fund managers, they're diversifying that portfolio that they manage by bringing in some fixed income, assets to that.
Which makes our region very attractive. So think about like if you run a C-REIT, commercial real estate investment trust, and you have a lot of stuff in like Kansas. I don't want to talk crap.
Oklahoma.
No, they're good. No, like, somewhere where you're like, man, it's, whatever, like Detroit for a while, like they couldn't get any kind of business going. Well, man, they're going to rush to get their money out of there and put it into here. Cause at least we have like job growth. A lot of people don't know this, but Laredo is the number 1 trucking port in North America. And we're the first stop.
Yeah.
Do you see what I'm saying? And so these are some factors, because we're on the key factors. We're on the key factors podcast. These are some factors that
are key.
Yeah. Touche. Too motherfucking shade. Yeah, for sure.
No, and that makes all the sense in the world. And I'm glad we got a lot of the basics, higher level of the basics, and nuance to what it is that commercial has to offer to folks out there. But now I want to talk about what the hell's going on with commercial real estate on a national scale that could have some implications on everyone else simply because of the things that you guys are talking about. If somebody as a larger corporation, I'm pretty sure Lock and Terra LLC owns more real estate than just Lock and Terra Mall.
For sure.
And just like you guys are saying, they diversify. So if they're going to unload properties over here, they're going to go look for other properties in another location that they can fill their books with and keep these investors or shareholders or whoever it is getting their dividend check. And the demand for those dividend checks or the increases payouts to those investors is doubling every year. They want more, they want more, they want more. That being the case, COVID changed a lot of what you guys do. It changed a lot of how we as consumers, commercial investors view commercial real estate as a whole.
Sure.
In addition to that, we've got a lot of buyers of commercial real estate property that purchased and financed at a very, very low rate during the pandemic, and more than likely do it on an ARM or a short-term type loan that a lot are about to be coming due here soon and needing to be refinanced. There's a lot of money on the books that is being lost because of the vacancy factors. Triple nets have gone down and all of those things on a national scale. From you guys' perspective, are you thinking that it is going to eventually or quickly affect the remaining market that we actually operate in?
A lot has changed. I certainly agree with that. The video that you showed earlier talking about all these vacancies, I think the most impacted by what you're talking about is traditional office space. Your call centers, your data entry folks, where some of these big companies have hundreds of people that do this type of work. And COVID did teach people that a lot of this can be done from home. You know what I mean? And if you have 100,000 square feet full of people making calls and, cubicles or whatever the case may be, they can do it half the time from home and you can take half the space.
Sure.
And that's become a very popular concept. I talked to a lot of people that work for big companies and big corporations and in pretty good positions. And I'm hearing a lot of this lately. They say, they're usually my age, and our age is like you get off your ass and you get up and you go to work. And there's no alternative to that. You know what I mean? It is what it is. And they said, but the work environment has changed so much, they're missing out on the best talent by not being, when they're looking for a vice president or a high ranking official within their company, because they don't have if they don't have the flexibility to allow them to work from home once or twice a week or whatever it may be.
Which is, in my opinion,
that's the expectation.
That's a damn shame, but hey,
that's the expectation nowadays. So that's, the world is adapting to that.
Yeah.
And so I think you see the biggest vacancies in real estate in that arena, and it'll probably take several years for that to work itself out. I can tell you in my little bubble in medical offices in Westover Hills, it's always rock and roll. Like JJ has said, it kind of became the second medical center, and everybody that had significant, medical business downtown or in the medical center in San Antonio wanted to get a branch, and they would fill my lease space. They would take a spot. I would do, partner them up with another doctor, and they would share the space. Everybody wanted to build their own building. Everybody wanted to get into Westover Hills. And then what happened now is the market's still moving, but what's struggling is shell space, because the big corporate guys came and built huge buildings. Now you have huge vacant buildings, all over the place in Westover Hills. That's all shell space. And so what you see is your second generation space is flying off the shelf. So for those that don't know, second generation a shell space means there's just a cold, dark shell. You see those buildings.
It's called white box.
Where it's called, it's just a white box. And
now, in those cases, someone like myself goes in to use it for office space. I go and build it out.
You go and build it out.
You put the walls where you want them.
There you
go. Well, a 5,000 square foot medical building is going to be a $500,000 to $600,000 build out. There's a lot of sinks. There's a lot of plumbing. There's a lot of work that has to be
sprinkled.
Done. And so you're going to do a 10-year lease, well, if you're going to do a 10-year lease for your medical office and you can find one that's already built out, you can see how that's a home run from anybody's perspective. So that type of space is still moving and moving very quickly. But the shell space has become pretty saturated, you know, and every email I get now is, do you have any second generation stuff we could look at? Do you have anything that's second generation? Because everybody's trying to save that cost and gear toward that direction.
Makes sense. That makes sense.
Yeah, he's talking about exactly what's happening. So remember the buckets when we started? It was, you know, if I'm an asset manager of like Frost Bank, I want office, multifamily, industrial, and then I want retail. Well, office was the first to go. 2020 knocked it out, right? And so they're bleeding out. So if we have those assets, then we're losing money on a monthly basis as a bank, and people are just not making their payments. They're readjusting their mortgage or the mortgages if they can. They're not being leased out. You know, projections are totally off. Here's the second bucket to not get full. Remember we're talking about the multifamilies where it was almost like a flip where you go get something at like a 4% or 5% interest rate. You put lipstick on the pig. So you have really good rents. And then you would have a really good cap rate because you have a really good return because your mortgage payments here, your rents were here. Now you make them up here. You just like, now you're making some really good money, and they would just literally flip it and then sell it to another they 1031 exchange, did not pay taxes, and they keep on going boom, boom, boom. This is what happened. Now, 5 years later, the numbers are right here. $270 billion this year is going to come up for refi.
Wow. That's exactly what I'm talking about.
I know you're going to go there.
That's exactly what I'm talking
but
about.
But now these
because most say that it's too big to fail, and I have to agree with them.
Well, let's get there.
Okay.
So 270 billion of refi coming this year, 2024, right? So let's say you have a really good relationship with Frost Bank. You've done like 3 flips or whatever. You've taken their money and you've gone, and they're like, hey, I need to refinance this deal because they only do 5-year balloons, homie.
Right.
So the ones 5 years ago, they're like, hey, we're ready to either put this to a 20-year or whatever, because everyone's kind of like they're trigger shy, right? And then Frost goes, sorry, homie, we can't. Because interest rate, the Fed is messed up. The interest rates are higher, right? And they'll give them a deal that they don't like. They'll say, "All right, man, we need 40% down, so you got to put some money in."
That makes sense.
Bring some money to the table. And we had you at 4.5. Now we have to have you at 9. And they're like, "Well, if we take that on, then our cap rate, now our investment sucks."
Yes.
Does that make sense?
That actually does.
So all these refis aren't happening. So the second bucket, which is multifamily, which is making everything tighten up more,
right?
Which is now affecting if they'll lend on. Definitely land sucks. They don't want land because, I mean, now look at the projections. So land is now being affected because you can't really finance. You see,
right.
So like the buckets makes so much sense. These buckets, waters are leaking so much that they're not just going to pour more into it.
Right. So
there lies where we're going to be affected from the other regions to us. The craziest story that I heard was in San Francisco. There was like some ungodly $145 million high rise that was just nearly vacant. So they got a broker. I know.
Wow.
They got a broker to list it, to auction it for one reason. Check this out. And this might happen here, homie. We might be getting a lot of, maybe me and you just partner up on this. So they list these properties and they auction it. And the highest bid was $55 million out of $145 million. And they only did that just to go back to their bank and be like, this is what it's worth. Let's renegotiate the terms.
Boom.
Think about that.
It's smart on their part, 100%.
They paid the broker out. They said, thank you for your service.
What I find funny is very different than residential side.
But think about that. Imagine you list in your house just to like say like, bro, it's only worth a third of what you lend. Like, can we work something out?
Yeah, that's what I mean.
But they have leverage because the bank's like, what else do I do?
And unlike residential, you can't go to the bank and you're not trying to sell it. You're trying to keep it, but renegotiate the actual terms
so that it makes sense.
So that it makes sense. On residential side of the tracks, you have to actually actualize the sale for that to even matter. You can go dispute the taxes on it, but you're only saving a little bit. But in this aspect, you can literally go, and I watched a good documentary on this or a podcast on it. You can literally, as the commercial real estate, depending on how much assets you have on hand or how much property you have on hand with these investors, banks, can renegotiate your terms based on the new value that it has. That's a cool concept, but is that fair?
It is fair because if not, if you bank with Frost or I bank with PNC, like if PNC like needs to renegotiate some mortgages for like a 10-year term, then like maybe they only pay interest or whatever, and then so that I can still go get money from my bank. Like, I'm good. Like, do your thing. So yeah, I think there's ways out. What's going to,
would that not yet put the commercial owner in a position of never really needing to be too scared about their property if they have the ability to renegotiate that? And realistically, the only person that's on the hook is the bank, the person lending the money.
but who makes the most money, right? Like, so
It all depends. What's the best use of the property? Let's get a feasibility. Let's compare it to what they make on the note, et cetera. I mean, there's, again, more nuance to it.
I mean, I can geek out on this all day
long. You know what I'm saying?
I can geek out on this all day long. Well, then we got to change the 10-to-1 lending rate then. Because, banks, if you
absolutely
they leverage 10-to-1 of every dollar that they have.
Yes, sir.
Then the only way for what you're saying
they need to keep more on reserve.
Yes. So if you're allowing them to leverage 10-to-1 and you want the economy to be robust, then they have to take risk. No one knew COVID was happening.
Of course.
It was a really good run with multifamily. That was super fun.
Or did they?
Exactly. Bum, bum, boom. No. Yeah. So then you got to change, I can geek out into this. So then you got to change the 10-to-1 leverage. And that's not going to change for a while. So then look, we don't have to bail them out in 08. This aren't our fault. That was my fault in 08. I was like, if you could fog a mirror in 2007, I was getting you a house. That's my fault. This isn't our fault this time. It's other economic factors.
There's other levers that have been pulled.
It's inflation. What's happening is inflation is tightening everyone's budgets up. Those budgets are making brand new Class A is still okay. So the second oldest then has to drop price. So their cap rate changed. So they go to refi. Those numbers don't look good. Those terms suck. And so inflation is what's driving
for sure
the squeeze.
Yep.
Not our fault. And so therefore we are going to see a change in the next 5-10 years. As an investor though, get you some multifamily, get you some industrial, get you some medical office if you can, because this is going to be the biggest exchange of wealth I think we'll ever see in our lifetime, because we're already in our 40s.
And a lot of folks continue to talk about
100%.
That. Yeah.
Because everyone's like, oh, I wish I would have bought in 2021. I was like, what? I never why would you buy when the roller coaster is going up? There's no reason to do that.
Buy low, sell high, correct.
And I'll add something to that, JJ, because a lot of people hear about, the Fed changing the interest rate. And I think a lot of people don't really understand how that works. Mm-hmm. And JJ just touched on it, that 10-to-1. There's a reserve requirement that every bank in the country has, the biggest, and we're talking billions and billions, maybe even trillions, I don't know, of dollars that are moved around every single day.
Oh, yeah. Chase it moves the most.
They have to balance that.
Every day.
They have to meet that reserve requirement. Mm-hmm. So that at the end of every single day, a bank is going to either be plus or minus, and I've got to call JJ and say, hey, I need $40 billion. You know what I mean?
What note are you going to call in?
Right. And so when the government changes that rate, they're changing what's called a Fed funds rate. Mm-hmm. So they have a rate that does nothing more than create the market. You see what I mean? They say you can come to us and you can get that money overnight for 4.5%. Well, other banks are going to beat it, and it's going to create a market.
Absolutely.
You see what I mean?
And to layman term this, help you out a little bit, is most consumers, when the Fed makes an announcement for the rate up, down, not moving, that's not the rate that you get as a consumer. This is the rate that the investors, the banks, get from the Fed that then lend to you. Right. So back in the day, 2020, we heard the Fed rate is at 0%. And I have customers that would call and go,
why can't I get 0%?
I'd like to refinance at 0%. Yeah, me too.
Yeah.
But unfortunately, somebody's got to make money. There's a spread between that, and then a spread from lender to investor, et cetera, et cetera.
And over time,
that's what Andy's talking about.
As that rate changes, it affects all these other rates. You know what I mean? It affects, when you borrow money for anything, what your credit card rate is, what you pay for a mortgage, because these all come from who? Banks. Mm-hmm. So they're all affected by that change in the rate, and eventually it impacts everything. So yeah, that's exactly right.
No, that makes perfect sense. And now, that being the case, do you see an alternative universe to where these commercial spaces that aren't being filled by the normal use of what they were being converted to now residential?
No, that's my favorite game. So check it out. There's mid-rise buildings that have parking garages that are butt up against it, and there's places that they're making them self-storage where you just drive through.
Really?
A metal frame building. Think about it. You can just go imagine having self-storage that's stacked.
Oh yeah.
There's this one
I mean, where I keep my storage unit right here across the street at the, what the hell is it called? Square Storage.
Sure.
That's the coolest thing I've ever.
Yeah,
I mean,
they're
you
cool.
just go in by yourself. You're enclosed.
Yeah, it's like that.
Done. You're there.
They're also like, if you look at like office, someone did maybe it was in the Pacific Northwest or whatever. They cut a big hole in the middle of it so there could be enough sunlight to have a courtyards to make like a high rise into condos. So there will be a change of like what we're going to use office for. I feel like office as we know it is never going to come back. We can all agree on that. I don't think anyone's going to debate that.
Not on the same level for certain.
Definitely not. And so there's going to be this thing where we're all going to adapt to those pieces of land. They might get scrapped. Some of them, I think, need to get scrapped. It's funny. You can see relics of this before. Before the savings and loans in 1987, like you go up Warsbach and like Vance Jackson, you see all these office buildings that all look from that time.
Oh yeah,
that's because back then it was like 5%. If you're a doctor, you could do 5% down, and you only needed 2,000 square feet, but you built 20,000, and it was
right
like
there, medical and I-10,
all that.
Yeah, absolutely. I know exactly. What
So
you're talking
these
about.
we have really
big pink buildings.
Yeah, they're like those are like they look so outdated.
Mm-hmm.
We've seen relics of this before. It's just like I'm like driving around Athens because we've seen relics of this type of thing before. They were they were too loose on lending, crap changed, so they halted, and so yeah, that's exactly what's gonna happen now, no matter what.
That makes all the sense in the world. Okay, so now we've covered the basics. We've covered the concept of what's actually happening from a national scale, and the money and how it can shift and essentially change in way of terms based on the amount of rent or usability that it's bringing in with those banks. We know that more than likely there's plenty of loans that are going to need to be refinanced here in the next coming future, very near future.
Sure.
Are they too big to fail? We don't know. I don't think so, but who knows? Only time will tell.
I think we tighten up really tight.
So I want to read a quick article here, and you guys tell me if it is spot on or if they're just full of it. This is coming directly from NAR, and this says, now it's a little outdated, but I don't think things are moving too quickly. July 2023 commercial real estate market insight. Leasing velocity slows down in commercial real estate during year's second quarter, while there's still much uncertain about the total impact of the banking failures earlier this year, and we know about that part that were bailed out. There are rising concerns of speculation about where commercial real estate is headed, since commercial real estate relies heavily on small banks and capital. A ballpark in lending among these banks could further impact commercial real estate. However, data shows that the commercial real estate lending activity is increasing weekly. Meanwhile, delinquency rates for commercial loans have increased since the end of 2022, but they remain below 1%. Nevertheless, delinquencies are expected to rise further in the year's second half, and we know that they did continue to rise. So continuing on, as a result, most commercial real estate sectors continue to experience slower rent growths and higher vacancy rates compared to the previous year. In the office sector, there is a more available space for lease than ever before. Despite multiple efforts to repurpose useless office space and slow the return to office movement continues to hurt this sector. In the multifamily sector, rent growth has slowed even further compared to the beginning of the year, but vacancy rates remain virtually the same in the second quarter compared to the previous quarter. Although lease activity continues to slow down in the retail sector, the vacancy rate remains near 4%. The low rate in other sectors, commercial real estate, finally, the performance in the industrial sector has eased from the 2022 record high, but rent prices for industrial spaces grew more than 8%, significantly higher, faster than pre-pandemic, which what can we attribute that to?
That's the Amazon effect.
Absolutely.
Yeah, that's the Amazon effect.
I mean, and we're pretty much covering a lot of this stuff here without even reading this article that we talked about today.
Me and Andy could have written this better.
I think, I think there's a little bit of of deflection here, just my opinion.
Sure.
But they're tying this to bank struggles and an association with a slowdown in commercial real estate. Maybe that's a tiny fraction,
Right.
but I think more so, more impactful for banks are the rise in the 10-year bond. I take that back. Short, 1 year, 2 year, 10 year, 5 year, 30 year.
Sure.
The rise in bonds over in a very short period of time has a much more substantial impact on a bank's bottom line. Just like banks invest in commercial real estate, they always try to invest in fixed income assets.
Sure.
They have a predictable, they're trying to manage a daily number, to have a fixed amount of money coming in. And a lot of that goes into the bond market. And so you have had interest rates on these bonds skyrocket in a very short period of time over a couple years. Well, that means if you have a 10-year bond that you bought 5 years ago, the face value of that bond, today or last year is like 60% of what, so you can't,
less.
So what are you going to do? Are you going to sell that bond and take a 40% loss?
Nope.
Or are you going to sit here and hold it and continue to collect a 2% yield when the going rate is now 5%?
Right.
Or whatever the case may be.
Cut your losses.
Either way, you're stuck in a real bad spot where you're losing a lot of money, and that happens on a very large scale.
Right.
I mean, over very long periods of time. And even it got to a point, I haven't followed it recently, for a while, the yield curves were even inverted, where you could go to the market and buy a 2-year bond with only a 2-year obligation that pays you more of a yield than a 10-year bond.
That's right.
Well, how are you going to sell your 10-year bond? You know what I mean?
And as we know, the inversion of that means that we've got that recession coming, but what the hell happened? We climbed out of it quickly, or did we? I mean, it's like, what's coming next?
So that's you talk about bank struggles and it being tied to commercial real estate. My opinion on that would be like, that's a tiny fraction compared to the real challenges that they're dealing with. And it's just kind of being pointed in that direction.
Think about where all the money is right now. Everyone's sitting on equity.
It truly is, because it's either in equity or it's on a charge card or credit card,
and one's got to give.
Yes.
Right. So like I said, I feel like talking to normal families, and I said this last time I was on here.
So I think you're going to get into the next phase that we can cap this all off.
Sure.
I think I'm not sure.
Go ahead.
But this last piece, and you correct me if I'm wrong, I want to talk about how it can impact the everyday person, being that it's commercial, doesn't have anything to do with them per se, but definitely possibly will have an impact on everybody.
Sure. I think,
is that where you were going?
Yes,
perfect.
For sure.
Okay,
so
good deal.
Inflation is happening more than we've seen in our lifetime. I was born in 1979, so I've never seen anything like this. You talk to there's memes and everything about it, like, you can't go outside for under $100. Like, dude, HEB, bro. It costs more money to cook at home. Think about that inversion, right? The first time in my lifetime, where if I go to Salada, I can eat $13 and I can't feed my child or anyone for $13 per person, and I'm a numbers guy, so I'm not cheap. I just know my numbers.
You ain't eating it Salada the whole family.
No,
that's
but me,
one meal.
I'm just being selfish.
Exactly.
They can starve. No, but I do those things, like, it's $13 a head if I eat here, but if I cook, it's like
same
$40 a head. I'm like, and I had to clean up and cook. So we've never seen this inflation before, and what that's happening is a combination of things. It's, free money that was on the market for a long time, interest rates that were too low. So the only way to think about, we spill water on this, I'm not going to give them any credit because I haven't sponsored you, but this water on this table, and then inflation is a sponge to kind of absorb it.
Sure.
So how do you absorb it? You have interest rates are up. How this is affecting average Americans more than San Antonians, because we already started with a low, standard of living.
Right.
Because I went to go visit my friends in California. I was like, holy smokes, bro. Like, we went to the grocery store. I was like, does this come with like a free servant? Like, it was crazy.
They come cook it.
Yeah. I'm like, dude,
he wanted to.
Yeah. I was like, I know. So, but we've been so blessed in I love San Antonio. We're starting to feel it, but we're blue collar. So just San Antonians in general, we're blue collar. We don't, you talk to people, they get the 3% annual increase, but we have 14% increase in.
You can't say it's all fixed, but it's very close to a fixed type lifestyle.
It's very
living.
close.
Yes.
So now that the rents are going to get high in retail, because remember the buckets, back to the buckets.
Absolutely.
How are they going to make up for these other buckets hurting? They're going to say like, look, now when we rent to industrial and retail, it's higher. So now the cost of goods and services are higher.
Correct.
Which squeezes America more.
Absolutely.
Which forces them into debt.
Yes.
Which forces them, when my business partner or when he does residential goes and says, hey, we got to list your house. And then usually it's like, why? Well, I want the dream home. And the next one, they're like, I just got to pay off my debt.
Right.
So this is how we're getting squeezed at all angles to get to shake the, bust the piñata to get where all the money is, which is equity that people are sitting on. And it's working.
It is. And I can't
Right?
necessarily fault the investors or anything like that for having to raise rents simply. And one would say, well, they're being greedy.
It's a business.
It's a business. This is how they make their money.
Yeah.
This is how they're used to making their money. And let's be honest and real, they're the ones that took the risk initially at some point in time to make that decision to do that. And for the folks that say, well, that's not fair, life's not fair, number one. Number two, if you were in the position that you took that risk to become that investor, to start with residential, switch over to commercial, now you're onto apartment complexes, now you're onto XXYZ,
Right.
Wouldn't you think that you would want to maintain that level of lifestyle living? Because once you grow that large, it's not just you that you're having to feed. You've now got corporations, you've got shell companies, you've got shareholders, investors, banks counting on you. There's taxes. There's so many different factors that are a burden for the actual investor. And I was watching something the other day to where how we were talking about the consumers and their rents going up, and they were the ones that were getting a lot of the relief. But at the same time, you still had landlords similar to the servicers of notes that were receiving the consumer receiving the relief to go into forbearance and not having to pay their actual mortgage.
Mm-hmm.
Well, that note was still due. So those investors still had to make those payments, just like the landlords still have to make their payments to the investors, et cetera. There's a lot of that still has not been filled within the realm of bringing the books back to even or getting out of that hole. Is that going to affect us more than we think? And I think you have alluded to that. It has to, because it's kind of the trickle down effect.
The average American's getting into debt, man. And so everything's getting too expensive. And so we gotta live in our means, and America doesn't know how to do that. And the only way to do that is they're forcing our hand. And it's working.
Right.
It's definitely working. And it's going to be like that for a while.
I think what you're referring to, Mark, I can remember in 2020 and 2021, every time I talked to my real estate attorney for help on a project that I'm working on, he would say he's buried in rent abatements. Oof. So rent abatements mean that you're renegotiating somebody's rent, and maybe it was a 5-year lease, and you're going to say, okay, the only way we can stay here and not default on you is if you let us go 6 months without paying anything, and then we're going to add 6 months to the term. And so a lot of that took place, and a lot of it will shake out and work through. I think it's still yet to see how it all plays out, but it was definitely an overwhelming, time for a lot of that to happen.
It will be for a while.
And it will be for a while. But I learned something during that time as well I'd like to share, because it's probably one of the biggest lessons of my real estate career. A lot of people hear me say all the time, at the end of the day, all the problems, all the things that look like they're going wrong, when it's all said and done, in my experience, the answer is still always to get your hands on the real estate, to buy the real estate. Yeah. And I'll share a story. In April of 2020, I think you've probably heard this from me before. I had 2 big medical projects in feasibility. One was a 20,000 square foot building with multiple doctors, and one was an independent doctor's office, about $10 million worth of real estate. And in April of 2020, both are in the feasibility period. They both call me and say, we can't operate. We can't have people in the office. Our business is down.
This was April?
This is April, right when,
Pandemic hit you right in the face.
Chaos.
Our business is down 60%. There's no way we could move forward. And I made a huge mistake because, I come from a sales background. I was a sales manager for many years, as you know. When you know what's right, you overcome those objections and you try to keep things moving forward. Well, I was caught up in all the BS too, and I didn't push back. I was like, hey, I get it. Your business is down 60%. We're talking about a multi-million-dollar project. The future is so unclear. I understand. And we ended up, terminating those transactions. Kind of sucked, as you can imagine.
I'm sure.
I'm sad.
Now,
I'm on my way back from Vegas right now.
Now, the good news is most of those doctors a year or so later built another office, and it wasn't the same big project, but we did several other small offices and got everybody taken care of. But here's why I take responsibility for being a little bit at fault. If I'd have pushed back more, they'd have got a better interest rate. They would have bought it at a lower price, and prices would have gone up. If you could see through how challenging the time is and understand that even though you can't see it and it doesn't seem right, the answer is still to buy the real estate, and they would have been much better off. Don't get me wrong. Everybody's happy. They love their offices. It's great. It worked out just fine, but I'll never forget that I could have done better. You know what I mean?
Absolutely.
I'll never forget that. And so that's one of those things that I guess you just learn from life, and you know what I mean? And doing the best you can. But the answer, in my opinion, no matter what the circumstances are and how cloudy that they might look, the answer is usually always to buy the real estate and to own it and to operate your business out of it and move forward from there.
I would also say don't panic. Looking at your money market right now, you can lose so much. If anyone has stocks, they look at them like, oh my gosh, lost 10, 30,000, doesn't matter. But when they get a rental and they're like, oh my God, I had to pay a third of my mortgage and I want to sell it. I'm like,
I'm right there with you. Yes.
I'm like, tighten up. You know what I mean? Like, tighten up. Like
you just made an investment for a quarter of what the investment should have been just in that month. You still own the property that is still going to increase minimum 5-6% year over year. In addition,
and you can make it pretty. I can't.
Let me ask you this, customer. How much money
stock?
did you put into your savings account this month?
Yeah, exactly.
You see what I'm saying?
Like there's so much panic that I'll get a call from someone because I've been in business for 20 years this August, and so I make my clients buy investment properties, and they'll call me like, dude, like vacancy 2 months, or I have to pay a mortgage payment. I'm like, how? That's what investment is. There's risk.
That's right. There's risks.
There's vacancy rates.
Yep.
If you can't, obviously, if there's health matters and you just like whatever, I'm like. I would rather not go to Disneyland this year and keep the asset because the asset will give that kid a college money instead of
down
taking
the road. Yeah, for sure.
So
for sure.
Just make decisions.
They pay dividends in the long run.
Make decisions and make them smart for the long term because this is a marathon, not a sprint.
I like that. Well, guys, that's been freaking awesome information. I've got one last question per se for this before we close it out, and that is advice for first-time investors, the consumers out there that are looking to potentially move out of their house to finally start their business or to finally start leveraging some money to grow some real generational wealth and opportunities. What is the advice you would give to them on why it's so important to have representation from a commercial realtor?
Well, I would certainly say it's extremely important. And for one reason, a lot of people don't understand it and don't understand what they can get, what they should be asking for in the way of terms. I remember when we did your lease and you wanted a chicken coop that was, and we got the chicken coop.
We got the damn chicken coop.
Whatever, right. Yeah. They're like, you have any chickens? I'm like, we're about to. You know what I mean? Like when we get our coop,
That's right.
A lot of people don't know what can be asked for because it can be a little intimidating.
True story.
You're not dealing with usually just your average new realtor. You're dealing with somebody at a big company or big organizations that have been doing this for a very, very long period of time. And you have to have somebody that knows what they're doing represent you. And I'll take it a step further. And kind of what I take pride in, and JJ, we laughed about it earlier, both kind of breaking into this commercial real estate world. And like I said, I call it banker's hours on steroids. You know what I mean? Yeah. Try to call on a bunch of listings at 2-3 o'clock on a Friday. You know what I mean? And then set your calendar for Tuesday on when you're going to hear something back.
Sure.
Maybe. You know what I mean? It's like I said, it's banker's hours on steroids. They also consumers need somebody that's available. I don't treat it any different than my residential real estate business, that we have a deadline that ends tonight, so I'm available all night to make that work. I treat my commercial business the same way. And I'm sure JJ does as well. That's what differentiates you from everybody else. And I've had projects where, a lot of times they're physicians and they're only available after clinic. So we're meeting on this project once or twice a month for sometimes a year or more. And that needs to happen at 7 p.m. That happens at 7 p.m. You know what I mean? And so I would suggest not only finding the right commercial real estate agent that's knowledgeable and can make sure you get everything you need to get and guide what the expectations are and guide you through the complex process, but is also available all the time. You know what I mean? That's buried in this transaction, just like you are. I like to tell the medical clients, you know what I mean? Like, I'm sorry, but you know what I mean? I'm in it. I want to go to all these meetings. I go to every architecture meeting. I want to be involved. I don't want to miss anything, because that's how I learn too.
Yeah,
that's how I get better.
Didn't you have an example of a client that ended up not going with you, that ended up reaching back out to you?
I did. That was a tough lesson. That was many years ago, but I worked with a client quite some time that wanted to buy a medical office. We looked at a bunch, spent a lot of time with them, and they ultimately decided on a residential home, over $1 million residential home.
Wow.
We went to it 5 or 6 times with contractors, and they had a vision of converting that into a medical office, and they wanted to put in a parking lot. And, I was a little skeptical about it, but showing them everything they want to see, working through the process. We got to get the price. And they were hell bent on it. Well, I was digging in a little bit further for them and found out that this is, obviously now zoned residential. And in this particular municipality, the process to change that from residential to commercial was very complex, and it required a lot of things like your neighbors agreeing to it. You know what I mean? And and then the city council of that municipality has to agree to it. And so I went to him and said, "Look, I'm not comfortable with this. I have no desire to ever participate in a project that doesn't kick ass. You know what I mean? I just don't. I don't. It's no desire whatsoever.
Put that on your card.
Just no desire whatsoever. And so far,
Kenny Powers,
right? So far, we're at 100%.
We don't kick ass, and he don't want it.
I don't want to do it. Yeah. And so, I told him, I don't think this is going to work. I don't think we're going to be able to get the zoning you want. And we had a difficult conversation one night. They called me, the husband and the wife, and we think we can do it, and we think it'll work. And we found another realtor that has no problem writing this up. And I said, okay, I'll send you the paperwork to release you from our agreement, for the buyer representation agreement. You're welcome to do what you want to do. And this other agent wrote them up and made $40,000, you know what I mean? And went on about their way. And I just consider that dirty money. I know it's not going to work.
Right.
And several months later, I get a call, and they're going, "Hey, we need your help. We can't get this zone to residential." And I'm like, we can't get this zone to commercial. I'm like, I know. And I'm sorry, but I can't help you. You know what I mean? Like, there's nothing I can do now. I was trying to help at the time when I couldn't make a difference for you.
Correct.
And, maybe they didn't recognize that they were working with somebody that knew what they're doing.
Yeah.
Maybe they thought they'd do better. I don't know. But I'm sure that was a very painful and expensive experience.
Oh, I'm sure.
It's
and I'm
painful.
sure that if you were an incredibly freaking talented realtor salesperson, you'd have said, "Would you like me to list it?"
Yeah. I'm sure you did.
Right? I may have offered.
I know a great
residential
listing agent.
Hold on one second. Hello. Right.
Hello.
This is Andy. Yeah. This is Andrew.
Yeah. Right. So how about you, JJ?
Look, what he just said is like, we're so fortunate to be in the 7th largest city in the United States of America, and so if you look at how the big boys do it, CBRE, JLLs, in the niches of the riches. I'll be honest with you. If I get a medical office client, I'm going to send it to Andy, and he's going to pay me a referral, right?
Yeah.
See, all day long. I like to learn more.
Sure.
But Andy's, you know what I mean? Like,
you've gone down the road of your expertise.
Yeah.
It's very nichey, it sounds.
It's in the niches of the riches. I'm good at industrial.
The niches of the riches.
I'm good at industrial. I'm good at retail. Multifamily is okay. I hate land. But if this guy's niched out. So I got Rav. So Rav does all the hotels all over the U.S. If I get a deal with a hotel, it's going to Rav. A 30% referral is dope because all I do is just pass the ball. It's like I'm Jason Kidd and they're just dropping dimes. I'm getting paid. So it's cool because we're big in a big enough city that we can niche. Like if we lived in like Kansas, I'm back to Kansas. I'm just kidding. But if you lived in like a rural town, you kind of have to know it all.
Right. You don't have that flexibility.
And so, but it's so overwhelming, bro, just to know like just one portion of commercial. And I wish it was called commercial trading and residential real estate because because we don't even say what did that sell for. We say what did that trade for. Isn't that weird?
Yeah.
Because we only trade. We 1031 exchange stuff. So I wish it was called something completely different so that residential agents wouldn't
differentiate
dip their toe in there. Because they're like, trade what? So in the niches are the richest. So definitely look, if you're going to hire someone, you definitely need it almost as much or more than residential. And then say like how many, like I've sold a lot of churches for some reason. So like a lot of
like chicken.
No,
just kidding.
No, they never sell. That's how badass they are.
Yeah.
They're recession proof. Yeah,
Yep.
Them and Fred's Fish Fry, they're not going anywhere. So like I get a lot of agents say, "Hey, man, I don't want to deal with the churches. They're 501c3s. There's all these tax implications." And I'm like, "Oh, I've gone through it." Mm-hmm. And over time, if you go through enough, I mean, there's always that first one that maybe I'll do one with Andy. I'll give him the bulk of it. He'll let me hang out with him, and then he'll teach me the ropes a little bit, right? And then it's I do, we do, you do. Right in our game,
right?
I'm gonna do it. You're gonna watch and shut the hell up. We're gonna do it. I'm gonna take more than you. You're gonna shut the hell up, and then you do it. And that's enough for me to give Andy some money, and vice versa. And that's how commercials done is. So just ask him like, how many churches have you sold? How many franchises have you helped as a tenant rep? How many multifamily units have you sold? So we're fortunate enough to be able to niche in San Antonio. So as an investor, make sure you don't want to be the guinea pig,
right?
You should like it when multiple brokers are working for you at the same time. That means they're doing their due diligence, and I'm bringing in an expert because he's the man. I'm the boy right now on that. And so
he can fill in all the voids.
Yep. Let's roll.
And everything he's saying, too, that's the difference between a lot of agents that just want to get their next deal done.
True.
And somebody that's trying to do the right thing for the consumer long term. Because bringing in the right people that know about this particular niche is the right thing for the client to get them the best service.
Absolutely.
I get it all the time. People, I'm sure you do too. People say commercial real estate and they just assume you know everything. And that's not true.
Not true.
People call me and they want to build a bar in a loft downtown. And I'm like, man, I just don't know about that. You know what I mean? Like,
right. But I know someone that does.
Right. I can get you to somebody that's done this type of work before, but this is not in my wheelhouse, really.
Right.
And once again, I don't want to participate in any project that doesn't kick ass. You know what I mean? So I'm going to have to partner you with this person that knows a lot more than I do about it.
And it's so litigious.
Like, and I may tag along because I want to learn.
Sure.
But that's what's doing right for the consumer.
Right.
So I would certainly say when you're talking about finding the right broker, ask all those questions. How many warehouses have you done? Can you give me some examples of some that I can go take a look at? Can I see how they went?
Absolutely.
If you built it from the ground up, who's your team? What contractors do you do? What architects do you use? You know what I mean? What all needs to happen? The biggest question I get is what all needs to happen during a feasibility study? Well, you need to do X, Y. It's not like residential. It's not just one inspection and you're done.
Nope.
There's a lot of stuff that has to be done to meet bank requirements, different phase 1 environmental studies. I mean, the list goes on, and you need to have somebody that knows how to do all that.
Right.
And if they don't know how to do all that, you need to have somebody that's responsible enough to say, we're going to partner with this person because they understand this. Correct. And I think everybody needs to understand that they're getting that. And you have to ask those questions to make sure you're dealing with the type of person that's going to make sure your best interest is first and foremost.
Right.
The rest of it will work out.
Wow. Well, guys, that's a hell of a lot of good information, especially for me, being somebody that's like a sponge, especially in this sector of real estate as we operate in every day. I've learned a lot from this, definitely, especially from someone that is an aspiring investor on that regard. I now kind of have reaffirmed my dream to own commercial real estate, truly, to start earning my triple net and getting those write-offs and building my long-term legacy, because you can do so much with residential, but the real game, the real big boy club is that commercial sector.
For sure.
I know a guy.
All right. Yeah.
I know too.
Now I know too. That's right. So for you folks out there listening, we've got plenty of key factors and insight. I mean, from a let's start with commercial potential investor. Super important to have great representation. It is totally fine to shop those realtors and to ask all the questions that you need to feel comfortable, because it's a large investment. From the consumer's aspect of it, what's happening in our market and what took place with COVID has shifted the way we do business, how we operate, and how this commercial real estate is viewed, especially from the investor bank side of things. And if you're thinking that this may or may not affect you in the long term, it probably will. So if you're currently renting, paying to a landlord, paying to an apartment complex, something along those lines, it may be time to start looking into owning your own real estate, simply because your rents are going to rise. There's nothing you can truly control about it, and it is their right to be able to do so, because they've got more people behind them that are waiting for their mouths to be fed as well. From a realtor standpoint, if you are a residential realtor looking to try and put a commercial deal together, I'm going to advise right now, don't do it. Just don't do it. Get yourself a referral source, like one of these two gentlemen, and cling close to them, but obviously make sure to respect their boundaries. They're in a different class of realtors that, I'm not going to say better or worse, but totally different. There are way more ins and outs and nuances to just the contractual side of doing commercial real estate. The world is going to be okay. The sky is not falling. And is it too big to fail? I don't know. We'll find out here soon, but I do know that there was plenty of information that you can actually take to the bank and cash on this one. So that being the case, gentlemen, thank you so much for sharing all the insight. That was damn good.
Good job, JJ.
You too, bro.
Other than that, like, share, subscribe, all that jazz, but we will catch you on the next one. Welcome to Key Factors Podcast, where knowledge meets ambition in the fast-paced world of real estate and mortgage. I'm your host, Mark Jones, bringing you the latest insight, trends, and expert advice to navigate this dynamic property market. In each episode, we dive deep into the heart of the industry, dissecting market movement, exploring investment strategies, and unlocking the secret to real estate success. Whether you're a seasoned professional, an aspiring investor, or simply looking to stay ahead of the curve, this is the ultimate guide to making informed decisions in the world of property and real estate. So grab a seat and let's uncover the key factors that make all the difference. Welcome to Key Factors Podcast. Let the journey begin.